We're 2 days away from the Bank of Canada's next interest rate decision. With inflation trending downwards, our next guest says we can expect another rate cut this week. Carlos Capistran is the head of Canada and Mexican economics at the Bank of America. Joining us now. Carlos, thanks so much for joining us. I wonder if the retail sales figure, the disappointing retail sales that we saw in Canada, was also essentially solidifying the likelihood of a rate cut in a couple of days.
Hi, hello, glad to be here. Yes, indeed. I mean, this is just one of many data prints that are actually pointing in the same direction, which is a weak economy, a soft labor market, and inflation trending down. So everything is just pointing to the Bank of Canada having space to cut the policy rate again, 25 basis points this Wednesday.
What's the risk that they don't cut?
Well, there is a risk, of course. I mean, one reason could be they may be waiting for the Fed, you know. I mean, the rate in the US and the rate in Canada usually move in tandem. So there is a limit to what the Bank of Canada can do and cannot do with respect to the Fed. But we believe that right now, if you look at the business cycle in Canada with growth below potential already, with a soft labor market, that is in contrast to what we're seeing in the US, I think the Bank of Canada can really cut this time, even if the Fed doesn't. So that could be, I would say, the main risk, that they delay, maybe they skip a cut this week and wait for the next meeting, maybe giving a little bit more time to the U.S. Fed to eventually cut rates this year as well.
How much of a concern is the weakness that we've seen in the Canadian dollar? Is that just front running? Is it pricing in that divergence? Or if they deliver on a rate cut, could we see further weakness in the Canadian dollar?
I think we can see some further weakness in the very short term, just a little bit, although at this point the market is pricing almost entirely a cut this week. So if it moves, the Canadian dollar is not going to move much. And for the end of the year, we actually have the Canadian dollar at 137. So literally here. So we are not really expecting any big movements from the Canadian dollar on monetary policy.
And I ask that because there seems to be some chatter among those, on the buy side, starting to ask questions about at what point, is the Canadian dollar too weak to the extent that we start importing inflation, but also that you have to start thinking about earnings powers of some of these companies that might either take a hit or maybe conversely benefit from a rising U.S. dollar, but that could be hampered, particularly, in some currency-sensitive areas.
No, I think we are far from there. I think the Canadian dollar is not a concern at all for the Bank of Canada at this point. And I think that what we should expect is the Bank of Canada to keep cutting rates, and maybe even if that weakens a little bit the Canadian dollar, which again is not really something that we are expecting. But if it happens, first of all, pass through to inflation in Canada is extremely low, so I wouldn't be really worried about that. And the impact on firms, well, is pretty heterogeneous. Some that export are going to benefit if that happens, and others are not going to. But overall, Canada being a very open economy, in general, a weaker currency should help growth overall, and that is something that the Bank of Canada would try to get eventually from cutting rates, but we're talking more next year. Right now the economy is decelerating, inflation is coming down, and the Bank of Canada is likely to respond to that, regardless of the level of the Canadian dollar.
Rate cut in 2 days is your assessment. What about thereafter?
Well, I actually think they can cut at every remaining meeting this year. I actually have the policy rate at 3.75 by the end of this year, and then I think they can keep cutting next year until they reach 3%, which is my terminal rate. The market right now is pricing a slightly lower terminal rate. It's probably a little bit too much. I don't think the Bank of Canada can go below 3%, but for now I think they can actually cut at every meeting because the inflation is there. Again, if you just look at the unemployment rate, it has been really increasing. So unless there is something like the Fed really not cutting this year or something like that, I really see space for the Bank of Canada to cut at every meeting.